Hi, this is Mark from ValueCharts.com. Let's follow up on the commentary we made yesterday on the soybeans market. We talked in the early night session about this market possibly heading up and going on to test the upper range of the wedge pattern that we're currently in on a daily and a weekly chart. Right now, what I'm seeing is the MQ migration index on the very bottom, along with the MQ cycle finder. I'm really seeing these indicators potentially bottoming out here, finding strength and possibly heading higher, which would suggest for both of these indicators that we are due for some sort of upcycle here. So this plays into what we discussed last night as being a possible or a good buy signal for possibly testing the upper boundary of the wedge pattern, which puts us right around the 1665-ish level. I'm going to go ahead and pull up a daily chart. Let's go ahead and draw the wedge pattern on our screen that we referred to in last night's video. We've seen a little bit of a volatility today, not really a directional move so far, but the short-term indicators would suggest that we should be starting to head higher here, and at the very minimum I would expect us to test this upper boundary here with what we've seen so far. Now, the good news is I think we can probably put our stop below the low of today, and I'm going to have to remove my drawing tools to see what that is. That looks like it's right around 16.19 or so. So talk about 12 cents worth of risk. It's really not even that, because last night we talked about using or getting in this market intraday at a let's say on a 60-minute basis using call it either a 10-bar analysis period or a 14-bar analysis period on the value bars. So let's pull up a 10-bar period here, and we can see that we actually finally hit that moderately undervalued target prices that we talked about yesterday. These are the bottom yellow bar segments here in this chart that we're looking at that would get us in at an attractive value level. This really is perfect. So if we would have entered the market at these levels, which put us right around the 1623-ish level, then we can put our low or our stop essentially at 1619-ish, a very, very tight stop, and risk essentially just several cents, maybe 4 cents or so. And now with this trade, we're looking at about 8 cents of profit. I fully expect this market to continue higher on a 60-minute basis and a daily basis as well. So we'll continue to watch this market. There again, we haven't done a lot since we entered this trade or suggested entering this trade last night, but we are heading in the right direction on the 60-minute chart, and we would expect on the daily basis to go up and test the upper range or upper trend line of the wedge pattern that we currently find ourselves in. Any break of the wedge pattern to the upside or the downside would be noteworthy and could suggest higher prices, much higher prices possibly in the soybeans market. Or if we break the lower range or lower trend line of the wedge pattern, we could see much lower prices. So we're playing in the area where the market has not really cast its vote in which long-term direction it's going to trade in, but we see some low risk entry possibilities. We identified that last night, and we can essentially define our risk as being 4 cents. So the trade makes sense if we hit the upper trend line right around, call it the 1665, 1660 level. I would suggest taking profits at that time, and then obviously once we get maybe a degree of separation beyond the high bar here at 1643, if we can follow through and break up through that, I would suggest moving your stop level up to break even. In fact, if a trader wanted to do that, they theoretically could do that right now at right around the 1623 level, because that places us higher than this next trough in the market or next cycle low, according to the MQ cycle finder and the MQ migration index at the bottom of our screen. Let's continue to follow this market here over the next couple of hours and days.